All right. Good morning, good afternoon, everybody. I lost track of what time it is. It's a pleasure to be here. I've been really looking forward to this panel. We're going to be talking about decentralized physical infrastructure networks, also known as DePIN. It's been this emerging vertical or sector that I've been paying attention to. Essentially, what DePIN is it's networks that utilize token incentives to incentivize individuals to deploy physical or hardware, physical infrastructure or hardware networks in the real world. And so these networks could include, decentralized 5G networks, decentralized server networks, or even a decentralized network of interconnected vehicles. So I'll go ahead, we'll jump into it. I'd just like each of you guys, if you could introduce yourselves and the project that you're working on, that'd be great.
Sure. I'm Doug Picanics. I'm the founder of a project called LivePeer, which is the world's open video streaming infrastructure network. It's been live for about 6 years, and it powers over 2 million minutes of video streaming per week at 90% cost reduction over traditional services.
I'm Alex Rawitz. I'm one of the co-founders of Demo. We're a decentralized connectivity network for vehicles, and we're looking to kind of do for the automotive space in terms of opening things up and allowing developers to come in what DeFi has done for the financial space.
Hi everyone, I'm Michael O'Rourke. I am one of the co-founders of Pocket Network. It's a protocol that incentivizes people to run full nodes for other blockchains. And we've been live for about 3 years and do about 1 to 2 billion requests a day.
Hi, Scott Siegel, COO of Helium Foundation. Helium is a network that would build wireless networks using crypto as an incentive model. Launched in 2019 with a focus on Internet of Things and smart devices. Built up that network and then used the same model to launch a mobile side network for cellular use that launched this past year.
Perfect. So Helium and Demo were kind of like the DePIN 1.0 networks, even though, LivePeer and Pocket have been around for a while. But these networks really proved that you could use these token incentives to incentivize individuals to go out and deploy, hardware devices. So I'm curious for newer DePIN networks, if you guys could describe some of the challenges that you guys faced and what worked and what might have not worked when it comes to trying to get somebody to, for example, set up a hotspot in their house or to set up a miner in their vehicle.
So, I think that one of the things that DePIN really changed from crypto several years ago is the idea of democratizing the idea of mining. That user experience absolutely matters, and it has to really cater towards a non-crypto native audience where you're not doing a very complex and cumbersome setup on a mining rig. It's something that is very, very almost consumer-friendly hardware. I think that was one of the big things that's unlocked growth for Helium and a lot of the other projects of how approachable that hardware can be. The other thing that was really key to thinking about unlocking our growth was how do we start to expand the supply side from a single organization to many. Again, something that we ran through governance of how do you go from a single hardware manufacturer to many, and that you can kind of scale up and have multiple providers, creating an open market around it, and expanding supply. So 2 things I think were pretty critical to unlocking success for Helium.
And I think from Demo's perspective, there's a huge appetite from users to find new ways to engage with this exciting technology, whether it's on the telecom side or on the auto side, and now we're seeing companies that are starting to do energy-related DePIN projects. Consumers are really interested in new ways to engage with crypto that go outside of the financial. On the challenges side, a lot of those users get in their head that this is a money printing device and that's it. And then it takes a little bit of effort to sort of re-educate them, hey, we're building a network here that is going to have broader utility. It's not just about put some dollars in, get tokens out.
Following up on that, so I think what attracts a lot of people to DePIN is the potential to earn tokens. However, something unique about Demo is that you guys also provide an app which could provide additional insight into one's vehicle, right? Similar to how a smartwatch could provide information into your health. So could you kind of describe, has that been beneficial to kind of onboarding individuals? And do you think that's almost like a necessity for future DePIN projects to try to provide some type of additional value rather than just base it off of token rewards, because we know that when bear markets come around and those token rewards aren't really worth much, it might be hard to kind of continue onboarding.
Absolutely. We're setting up our reward system to really look and feel like any traditional reward system that somebody might use, like a Sky Miles account or your Starbucks reward points or whatever it is. Like, we want somebody who's not deep on crypto to look at this rewards and say, oh cool, Sky Miles for my car, like, makes a ton of sense. And they see the value, like, when I use it in certain ways, I'm going to get some rewards back. I think that, like, crypto is still grappling with this, like, how much do we change the incentives? How much do we change the tokenomics? I mean, it's like going all the way back to Bitcoin. Bitcoin doesn't change. And there's always that feeling of like, ooh, are we doing something wrong when we change? But like, there's a great model and governance for doing that properly and making sure that the incentives keep up with the growth of the project.
Cool. Doug and Michael, I want to bring you guys into the conversation now. So LivePeer and Pocket are like digital resource networks that crowdsource compute and other compute hardware and provide a service. And so my question is, obviously there's centralized providers that exist for what both of you guys do. What sort of challenges exist right now? So we know that a lot of these like Web3 companies or projects, as well as Web2 entities, they're still leveraging or utilizing these centralized providers. And so, what challenges exist, or like what's holding them back from utilizing these decentralized protocols? I'll start with you, Doug.
Sure, it's a good question, right? Like, I think anyone who's been following this space for a long time knows that we had to go through a bunch of phases, including like building out core infrastructure, like layer 1 blockchains, scaling that infrastructure, doing all of the product development and iteration to actually go to market and approach either consumers or a B2B model. And I'm actually really excited and optimistic right now that it feels like we're at this point where there sort of is nothing holding anyone back from being able to switch. I think these networks actually are functioning really well, scalably and cost effectively under the hood. And I think the like productization on top and the go-to-market motions have matured to the point where a traditional like Web 2 customer or buyer, in our case in like the video broadcast industry or an app developer, can evaluate something like LivePeer only on the same key characteristics that they would evaluate a Web 2 alternative. Is it cheaper? Is it as reliable or more reliable? Can it scale? And I'm like really excited that the answer is yes, using a kind of polished product like we have at livepeer.studio. I know Michael was talking about, hey, they have white glove sales, people who can provide integrations and do custom solutions for you. And that's like the sort of maturity that we're seeing now that maybe we haven't gotten to that level a couple of years ago. So I don't think there should be anything holding anyone back.
Yeah, just to echo Doug's thoughts, you're building the protocol, you're then building the product, and then you're figuring out how this product works in real life. Our biggest challenges have been really the last couple of years working on the quality of service of Pocket and making sure that that is world class. And one of the secrets here is that most developers don't actually care that Pocket is decentralized. They just actually want infrastructure that works. And we've gotten to a scale of 1 to 2 billion requests a day purely on the merits of the product itself, meaning it's faster, it's more reliable, and it's significantly cheaper, which is really the original vision of DePIN and why we're here in the first place. We felt that Pocket and networks like Pocket could be better by virtue of being decentralized, not just, hey, we have a network, come use it. So for us, when we think about competing against centralized providers and this sort of thing, everyone has to make a trade-off. And effectively in Web3, there's an infinite number of types of solutions that a centralized provider can offer to their customers. So for us, it's really about doubling down on the strengths of a network like Pocket and letting 1,000 gateways bloom, rather than saying, hey, we're just going to serve NFT APIs or DeFi APIs. And that's really what we're most excited about in terms of kind of hitting the broader market when it comes to the types of services that people can provide.
Totally agree. Continuing to pull on that thread, so I think one recent trend that we're seeing in the data center or IT kind of space is this transition away from the traditional cloud architecture to more of a edge computing architecture. And there's two main reasons for this. One is that the cost of sending a lot of data back and forth is costly, as well as as enterprises are integrating in these like AI products, bringing down that latency is critical. And so they're either bringing back their data centers on site or they're leveraging networks similar to Cloudflare. Do you think that, this new trend that we're seeing could drive adoption of these decentralized cloud networks? Because essentially they are like decentralized edge networks. Doug, I know LivePeer does route, for example, jobs to like the nearest provider. And so do you think, this could be a boom of adoption for these networks later down the line?
Yeah, that's like one of the beauty of these open, permissionless, decentralized compute networks is that a company doesn't need to come and say, well, where are we going to put our data centers? How many can we afford this year? We're going to add 3 more, so we'll put 1 in Canada and 1 in South America and 1 in Australia. You can actually have this whole organic bottoms-up participant base of anyone with excess compute capacity, excess bandwidth, adding it to the marketplace in thousands of different locations around the world. And what that means is, like you said, you sort of get this edge network by default, where users that want to stream video, their node will find a very nearby node that has a low latency connection that they can stream the video to with minimal, packet loss and kind of quality degradation. And that's critical relative to, say, a Silicon Valley-based startup that puts, all their servers in Amazon's US East 1 region and needs to be serving traffic from all around the world at a higher price with lower quality. And so I think just by opening up the marketplace to these idle resources, you're tapping into that, and you'll see it pay tremendous benefits when compute loads increase around things like AI, Ultra HD video, and other kind of high compute intensive use cases.
Yeah. Seeing Pocket's evolution of effectively all of the supply side running on the cloud 18 months ago, and now 100% of the network running on bare metal now has been an incredible thing for me to see. That's the nature of incentives and free markets and building these infrastructure networks. And what's been nice for us is that we've been able to decouple running the nodes and operating the gateways. Our company doesn't actually run any nodes at all. And what's nice is that since we're driving the demand, the supply side will naturally map to where the traffic is going to. So if we're seeing a lot of traffic in Singapore, well, then our supply side nodes will then move their nodes to Singapore, and these sorts of things. So really leveraging the true free market of these networks that we've built will lead to better solutions and allowing each side to kind of really focus and innovate on what they're good at, right? Traditionally, our companies that work in our space have to work in the full stack from the front-end product all the way down to running the nodes, the gateways, the proxies, and everything in between. This allows us to focus on what we're really good at, which is running gateways.
Scott, Nova Labs recently released Helium Mobile, which is a crypto-powered mobile carrier, which is just crazy to say. Like, it's awesome to see us like at this point now. Could you briefly describe, just like give a brief background on what Helium Mobile is and how your experience has been so far? Like, how have people, what was their initial reaction? Has it been difficult to onboard individuals? Is the crypto aspect kind of abstracted away? So yeah, if you could, a lot of questions, but.
So I guess kind of starting at the top of, so Helium was originally built for IoT use case, and that side of the network is actually very mature and well built out. But it really was something that came kind of through our community of, we have this physical network. We have folks who are familiar, who have deployed hotspots and understand, they understand the incentive model. They know how to climb up on towers and put up and put up radios. Which, by the way, was a very interesting thing. Helium was kind of a gateway into crypto for a lot of these folks who are much more radio side and wireless native. So being able to leverage that same type of a community for a different use case just felt obvious to almost everybody, whether it was Nova Labs Foundation or in the community. And it really was the idea of how do we kind of leverage this? How do we think about the different levers of how data is different on a wireless network that is for cellular and much more high volume versus IoT where lower frequency, long range. But yeah, I mean that launched this past year, and Nova Labs kicked that off. Right now, the focus is on Miami, so it's pretty amazing to see a promotion for a cellular subscription at $5 a month. I mean, it's absolutely wild, but the unit economics allow for that with community-built networks. And really, I think that from Foundation's perspective, we look at it as this is new opportunity for challengers, but it's actually very complementary for the incumbents as well. So the idea that T-Mobile, AT&T, Verizon, that any of them can actually roam into a community network where rather than them thinking about the capex of deploying new towers and the maintenance around it, that a community has the agency to stand up their own coverage and a major carrier could roam in. But for Helium Mobile, one of the things that's very unique is the idea that as a subscriber, you're actually able to earn rewards for mapping the network. So it's not just the supply side that benefits, it's the demand side of you actually are able to subsidize the cost of a $5 a month plan by mapping it to help determine where else does the supply side need to expand to. So U.S. only to start because there is open spectrum in the U.S., but from Foundation side, we've had inbound from these other overseas carriers of how do we leverage this community-built network and this platform to kind of expand our coverage as well. So super exciting to see it. Great for that kind of consumer use case. And growth's been going well for it. So exciting times.
So with subscribers earning, it's essentially cheaper than $5 too, which is cool.
I mean, effectively, if you were out there and just kind of walking around, so they're encouraging a little bit more of walking and physical exercise while you're also earning some tokens. It's pretty exciting and a lot of overlap in the community, but at the same time, it's two very distinct use cases. So it's nice to see it brought in another cohort of new users to Helium.
Yeah, so Helium Mobile is like one example of a business building on top of a decentralized infrastructure network. Alex, Demo is collecting a boatload of vehicle data. Could you describe like some potential use cases for companies that could potentially build on this data and what type of services they could provide?
Typically, people think about the aggregate data set, and there's really two use cases. There's this big data set. You can there's lots of companies that buy big data sets of vehicle data, whether it's for mobility applications, like where are people driving, where do we want to put new electric vehicle chargers. We actually had a developer recently build, and we're going to do some announcements on a cellular mapping network based on the data that's being collected from these cars. And so there's lots of different ways to put that aggregate data to work, whether it's valuing, creating insurance products and things like that. But what's most interesting is how does one individual use their own data in a transaction with a company? So one of the very initial use cases that we identified and that we've had some good discussions with car marketplaces on is there are several very big car companies that buy your car sight unseen, and you should be able to share your data with them ahead of that and say, hey, look, my car's in really good shape. Most of the time they're underbidding the value of cars because they don't know what they're going to buy. And you, as a user, should be able to permission that company to see that data and make a more informed decision and probably pay you a better price. And that can play out over sales and insurance and registration and maintenance. And there's all these different ways that you can actually, as a user, put your own data to work and just like be a better car owner.
Yeah, thanks for that. So if we zoom out a little bit, most of the DePIN networks that we've seen today are built around a passive participation model. So either set up a GPU, passively contribute to LivePeer, or hook up a miner to your vehicle, install a hotspot. What we're starting to see is DePIN evolve towards more of an active participation model where some projects are building decentralized rideshare networks, decentralized food delivery networks, or even a network where participants can go around and map potholes in a street, for example. So I'm curious if you guys think that these decentralized networks can orchestrate this type of activity, because it becomes a lot more complex, and there's a lot more things you have to manage. And so if anybody has any takes on that, I'll kind of leave this one as an open question.
I mean, I definitely think it's possible, but these are what I think some of the most interesting and hard problems, because you're actually, I think what the title of the panel is tackling Meatspace, right? So I think if people think about it in a way where they build the foundation or framework to allow many people to try different ways of accessing and selling the services of these protocols, I think there could be a path forward in terms of how we actually get to the more kind of consumer side of things using these DeFi or these DePIN protocols.
And I think things will naturally trend towards community or like enterprise organizational driven decentralization. There's not going to be a world where it's like a million individual actors contributing to build a network. It's much more likely there's 100 companies that are able to do this, and even that, or 1,000 companies, even that's a huge step above what you see in terms of monopolies in telecom, in cloud infrastructure, in the auto space. And so like it doesn't have to be that like, okay, everyone can be their own bank or whatever the DePIN equivalent is of being your own personal bank, but a lot of times it just means that there's more flexibility and it can become progressively decentralized.
Yeah, it's like that. It's the ability to have the optionality, and I think that's a really great point, because we think about how many gateways can actually exist in the world. Is it hundreds? Is it thousands? Is it tens of thousands? And it's really dictated by kind of the size of the market, I think, at the end of the day. So I think that I just wanted to highlight that's a really, really good point.
Yeah, I think for something where it's like more active participation, like the coordination layer required for even the passive income projects, which for a lot of us, that's not insignificant. So the idea that you have to have very actively involved, like an operational layer, to make sure you're thinking about, again, that user experience matters so much, both for supply and demand side, that to not have a coordination layer and how you think about that, whether it's regional or kind of like by your different target markets. I think that's really important. So how do you think about incorporating that into the incentive model would really matter for a project like that.
Yeah, like I'm glad you used the word coordination. I think it's hard to lump all of these things together under one bucket and say, hey, this is all DePIN, like a decentralized DoorDash is not the same as a decentralized cloud infrastructure. But I think the question is, like, what is the decentralized DoorDash tapping into as enabled by decentralized or blockchain technology that's really powerful, that's not possible without it, right? Like, is it, instant permissionless global crowdfunding? Maybe. Is it like provable ownership over a digital asset like an NFT? Probably not. But like collective global coordination? Absolutely. Like if that is powerful enough to catalyze this marketplace of, supply side delivery drivers and kind of demand side orders, and that gives you some super advantage over a DoorDash, then that would be like really powerful. So it's like you have to tap into one of these unique primitives.
And that's exactly how I kind of describe DePIN to people. It's a novel form of capital formation as well as a novel coordination mechanism as well. And so, like you said, like right now we're in the phase where we're grouping everything into DePIN, but these projects are so different from one another. But like you said, I think focusing on the coordination aspect is really what distinguishes these protocols from, say, like a DeFi network and so on.
I also think like what I really like about DePIN coming together as the term to describe these things is they all seem to provide some like real world or Meatspace utility beyond just financial speculation. So it's not such a circular internal economy only around token oriented speculators. Like the video streaming market is $100 billion a year. I'm guessing the wireless connectivity market size starts with a T for trillion and not even billion, right? Automotive data, right? Server networks and RPC networks are huge markets that the demand is independent of sort of the supply side speculation, and these like DePIN protocols kind of deliver on that utility, and that's really powerful.
I was going to say really quickly, I think that also a lot of the DePIN sector where you're talking about an end user that is probably a lot more traditional industry, Web 2. So again, the idea that there is existing demand, that you're solving a problem in the real world. I think it's what's so exciting about this sector is there are people out there who need to use the service, and the novelty of the networks themselves can very often just kind of overtake the incentive model. So that's kind of where we're still very bullish on this from our side. And we still have people who are coming in and using Helium every single day, and the kind of diversity of use cases that we're seeing across the network is pretty exciting, and all from pretty non-crypto native audiences. So
I love to hear that.
there we go.
All right, we're out of time. Thank you, everybody, and thank you for joining me on this panel, guys.
Thanks for having me.
Thanks, Sammy.
Thank you.
Thanks all.